Welcome back to Explain the Charts, where we delve into the world of financial markets, breaking down complex chart data and connecting it to relevant news and market events. Today, September 4th, 2024, we're analyzing AUDUSD, the Australian dollar to US dollar exchange rate. The AUDUSD pair has been experiencing volatility in recent weeks, making it a particularly interesting market to observe. We'll start by exploring some of the recent news and economic developments that may be influencing the current price action. In the past few days, there have been some significant developments impacting the AUDUSD, particularly concerning China's economic performance. China, a major trading partner of Australia, is facing headwinds with its economic recovery, potentially putting downward pressure on the Australian dollar. The Australian dollar is often considered a proxy for the Chinese economy, so any weakness in China can have a ripple effect on the AUD. Furthermore, the Reserve Bank of Australia's recent interest rate decisions have also been a factor in the AUD's performance. Let's take a closer look at the AUDUSD chart to see how these events are reflected in the price action. We'll begin with the daily chart, examining the overall trend and identifying key price levels. Looking at the daily chart, we can see that AUDUSD has been consolidating in a relatively narrow range for the past few months. The pair has been trading between approximately 0.63 and 0.67, with no clear breakout or breakdown. This consolidation suggests that the market is still trying to determine the direction of the next major move. We can identify a potential support level around 0.64 and a resistance level around 0.67, which have acted as turning points in recent weeks. It's crucial to remember that support and resistance levels are not absolute barriers, but rather zones where the price tends to slow down or reverse. Now, let's zoom in and examine the 1-hour chart to gain a more granular perspective. The 1-hour chart can provide valuable insights into the short-term momentum and identify potential entry and exit points for traders. The 1-hour chart reveals a more dynamic picture than the daily chart. We can see that AUDUSD has been exhibiting some short-term fluctuations, bouncing between minor support and resistance levels within the broader consolidation range. Recently, we witnessed a short-term rally, pushing the pair towards the 0.67 resistance level. However, this rally was met with selling pressure, and the price has pulled back from this level. This suggests that there might be some short-term resistance in place at 0.67. It's important to note that the short-term price action can be influenced by various factors, including news events, technical indicators, and market sentiment. Traders often look to technical indicators to confirm potential trading signals and identify overbought or oversold conditions. The Relative Strength Index, RSI, for example, can help us understand if the market is getting too extended in either direction. A high RSI reading might suggest that the market is overbought, while a low RSI reading might indicate that the market is oversold. However, it's crucial to remember that technical indicators are just tools to aid our analysis and should not be used in isolation. Finally, let's take a peek at the 15-minute chart, which provides the most granular view of the AUDUSD price action. The 15-minute chart can help us identify potential entry and exit points for short-term scalpers and day traders. The 15-minute chart shows that AUDUSD has been experiencing some choppiness in the short term, with price moving up and down in a narrow range. This choppy price action might be challenging for scalping strategies, but it also presents opportunities for traders who can identify potential breakouts or breakdowns from this range. Traders often use stop-loss orders to manage risk and limit potential losses on their trades. A stop-loss order is an order that automatically closes your position when the price reaches a certain level. This helps to protect your capital from significant losses, especially during volatile market conditions. Setting appropriate stop-loss orders is essential for responsible risk management and can help you stay in the game for the long run. In conclusion, AUDUSD is currently consolidating, with no clear direction for the next major move. There are potential support levels around 0.64 and resistance levels around 0.67. Traders should be mindful of the potential impact of China's economic developments and the Reserve Bank of Australia's interest rate decisions on the AUD. Short-term traders might find opportunities in the 1-hour and 15-minute charts, focusing on scalping strategies or breakout/breakdown trades. However, be cautious of the choppy price action and remember to manage your risk carefully using stop-loss orders. Long-term traders might wait for a breakout or breakdown from the consolidation range before taking a position. Remember, chart analysis is just one piece of the puzzle when it comes to trading. It's important to consider all relevant factors, including news events, economic data, and market sentiment, before making any trading decisions. Always do your research, manage your risk effectively, and never invest more than you can afford to lose.